On February 1, 2025, the United States announced it will impose a 25% tariff on Canadian goods and a 10% tariff on energy exports, effective February 4, 2025. This move marks a sharp turn in the historically robust trade relationship between the two nations. Let's take a closer look at the background, impacts, and the responses from both sides. For decades, Canada and the United States have shared the world's most comprehensive and dynamic trading relationship. Each day, $2.5 billion in goods and services cross their borders. This trade amounts to nearly $1 trillion annually, reflecting the deep economic integration between the two countries. The U.S. is the largest investor in Canada, and by the end of 2023, Canada became the largest source of foreign direct investment in the U.S. Notably, Canada is also the U.S.'s largest foreign supplier of energy. With such interwoven economies, the stakes of this trade relationship couldn't be higher. Trade between the two countries has been governed by a series of free trade agreements, starting with the Canada-U.S. Free Trade Agreement in 1989, followed by NAFTA in 1994, and most recently, the Canada-U.S.-Mexico Agreement, CUSMA, in 2020. This evolving relationship has facilitated trade across virtually every sector. But what exactly is a tariff? A tariff is essentially a tax on imported or exported goods. Tariffs are often used to protect domestic industries by making foreign products more expensive, thus less competitive in the market. When tariffs are imposed, it raises the cost of imported goods, making them less attractive to consumers. This, in turn, can push them toward domestic alternatives. The U.S. government has stated that these tariffs are aimed at compelling Canada to take stronger actions on illegal immigration and the trafficking of fentanyl across the border. Despite Canada accounting for less than 1% of fentanyl and illegal crossings into the U.S. insists on this measure. In response, the Canadian government has already announced an additional $1.3 billion in investments to strengthen border security and combat the trafficking of harmful substances. The U.S. tariffs will have wide-reaching consequences, both domestically and internationally. American auto plants, oil refineries, and consumers are expected to bear the brunt of these new taxes. Costs will rise at the gas pump, grocery stores, and even on American-made products using Canadian materials. Inflation is likely to follow. Canadian businesses that rely on cross-border supply chains will face new challenges, from increased costs to delayed shipments. Demand from U.S. buyers is expected to fall as prices rise, further slowing Canada's economy. In short, the tariffs could harm both nations, with rising prices, disrupted supply chains, and delayed investments as the primary consequences. In retaliation, Canada is not sitting idly by. Canada's government has unveiled a series of countermeasures aimed at pressuring the U.S. to remove these tariffs. Effective February 4, 2025, Canada will impose tariffs on $30 billion worth of U.S. imports. These will include consumer goods, appliances, alcohol, and even coffee. And if necessary, Canada plans to add another $125 billion in tariffs. Canada's countermeasures aim to protect Canadian workers, businesses, and consumers. By making U.S. products more expensive, the Canadian government hopes to reduce demand for these goods, sending a clear message to U.S. businesses and policymakers. At the same time, Canada is encouraging consumers to choose Canadian-made products to support local businesses and offset the effects of higher prices on American goods. For Canadian businesses affected by the tariffs, there are robust support programs to mitigate the impact. The government offers financing, advisory services, and support through institutions like the Business Development Bank of Canada, Export Development Canada, and Farm Credit Canada. Canada's government is also closely monitoring the situation, ensuring that additional measures are put in place to help businesses and workers as needed. As the trade dispute between Canada and the U.S. unfolds, the world will be watching. The next few months could reshape the economic landscape on both sides of the border. The key question remains: will both countries find a path back to dialogue, or will these tariffs become a new normal? For now, the future of Canada-U.S. trade hangs in the balance.